Welcome back to DevelopLex. Today we have on Landry Fields. I didn't ask you for a bio, but owner of Nova Insurance Group. I know that just off the rip. Real estate investor, podcaster. What other titles? Dad, father of three.
Yeah, trying to get better at golf.
Trying to get better at golf.
Bourbon
connoisseur. Love it. I've been friends with Landry for a few years. Mostly know you from insurance / like real estate meetup type of stuff. And I felt like time wise, like this moment in time, end of 2024, hurricane season, all the just crazy insurance things, was a super appropriate time to get you on the pod. Landry's also kind of blown up recently. He said he's on, this is one of 3 podcasts that he's on today. And then what was the name of the podcast that you were on last week or a few weeks ago?
The David Green Show, who was the former Bigger Pockets host. And so we did like a 2-hour deep dive into it.
Love it.
Super insurance nerd stuff as far as what's going on with that. So we don't have to do that today. You can go check that out if you want the deep details on that.
Yeah, well, we'll drop it in the show notes. But yeah, I thought it was super appropriate to have Landry on today. And wanted to talk about some of his background and just his relation to doing what he's doing in Lexington. I think it's really interesting when people do things that are related to commercial real estate from like something like an insurance deal. But you're also a real estate investor, so you have kind of wear a couple different hats that way. So all the things we want to talk today about. First thing, how did you get to where you're at today? How are you sitting here today?
Yeah, a lot of it, honestly, is just blind ambition. That really not having a true plan, but just kind of taking shots at things. And always had an artistic background and entrepreneurial heart, knowing I wanted to kind of build something myself in that sense. So 6 years, finally made that jump from into owning my own insurance agency. Kind of opened those doors, and it was a perfect time to jump into as far as just the market and where it was at. Opportunity as far as certain carriers and some opportunities that fell into my lap that way that would be difficult to do now again. And then at the same time, from a technology standpoint, that's what I'm very, I just kind of nerd out on the technology and the tech stack and the processes of stuff. And kind of, I was a musician my whole life, and it's kind of weird that from the day I opened my agency 6 years ago, that I really haven't touched music at all, which is, for me and anybody that really knows me, was a huge thing, because I try to go professional music for a while. Grateful that did not happen, but I haven't even touched it. And that was what I did my entire life since I was 6 years old. Used to even teach piano and so forth as well. That I was but the building an agency from scratch is it's consumed me as far as just met all my needs as far as that, the way I'm wired. And I think if I jumped into owning my agency even earlier, I probably would have been frustrated, because totally different conversation, but that whole world of insurance was very, very behind the times from anything related to technology and how things are transacted. And so bringing that world and things that have come out in the last 5 years to try to transition that has been awesome, and able to kind of leverage those in a big way to kind of make us stick out even more so.
We just talked about you do have a little bit of a musical background.
Mm-hmm.
I was a big 21 Pilots guy back in the day. Yeah. Landry did open for 21 Pilots. He mentioned that in passing, which was kind of neat.
That was fun. It was definitely probably one of the bigger highlights of who we opened and played for was 21 Pilots shortly before they kind of went on to win Grammys and stuff like that. So
that's pretty.
So my hair used to be a lot more spiked, and pants are still tight, and half my closet's still black, but I wear the insurance hat and more of the prep look, I guess, in some ways.
No mascara or eyeliner or anything?
No, nothing like that. No painting my nails and stuff like that. Nothing like that.
That's awesome.
By any means.
So grew up around Lexington-ish, family around Lexington.
Yeah, I spent the first couple of years of my life down in Powell County, Kentucky, Stanton, Kentucky there, or if you're obviously from Kentucky, you say Stanton. But my dad was a pastor for a short period of time there, and so loved the Gorge area, and it's been cool to see the development, honestly, in that area, which is obviously a whole nother conversation and not Lexington specific, over the last kind of 10 years. But then moved over back. My family's always been from Lexington, so I've always been in and around it, but basically grew up here from middle school on, and just love it. And the transition from when I was a kid from a development side downtown, it's just been unbelievable to see because, you didn't go downtown unless you were going to a Kentucky basketball game growing up at all. And now, you can come down here and do a lot. And we just came down here to the Nate Bragatsky thing. Me and my wife a couple months earlier in the beginning of the summer, and decided to spend the whole time with like dinner and the Nate Bragatsky, and then like one of my friends' bourbon bars after, and then went to the Manchester Hotel for the night. And it was like, this is awesome. Lexington is become very special and close to my heart. And honestly, it took me traveling outside of Lexington and Kentucky more to really appreciate what we had here, type of thing. I'd never really appreciated it growing up, and with Keeneland and so forth. I'd never even been to Keeneland, honestly, until late college, honestly, which was pretty sad. I know for sure. But yeah, like traveling really made me appreciate home a lot more, and I fell in love with it even more so as an adult.
SVN Stone Commercial Real Estate is a full-service commercial real estate firm located in Lexington, Kentucky. Affiliated with the SVN International Network, SVN has over 200 offices across the globe. The SVN Stone team consists of experienced commercial real estate advisors in the heart of the Bluegrass. SVN helps their clients with commercial property sales, leasing, investments, and property management. Let SVN help you with your commercial real estate needs. Check us out at svnstone.com. That's awesome. So traveled around a little bit. I said jokingly that Landry has kind of a checkered past in the sense. Checkered sounds derogatory. You have a lot of life experiences, which is neat, and then ended up in the insurance world. How did you get there?
That there's a saying in the insurance world that you don't find insurance finds you. And that's very true. I mean, I hope to kind of change that, and I'm actively recruiting a lot and trying to bring in new talent to the industry because I think there's a large opportunity there in that respect for new talent, and the way technology is driven these changes that would make it attractive to new agents and so forth. But I had some family in the business in a different part of the state of Kentucky. They kind of showed me the ropes, showed me different stuff. Eventually, they kind of helped also show me some doors to kind of knock down and potentially open my own agency. In which case I was able to do so, and that in some ways with blind ambition, if I knew everything I knew now about running a business, or especially building an insurance agency from scratch, I might have gotten cold feet. So I'm glad I had basically just kind of an idiot, let's go for it mentality in some ways, which is also probably part of my life story sometimes, of just like, let's do it, like no regrets kind of ideas. That it's worked out. It's been massive. We've grown exponentially over the last 6 years. And I before being in insurance in general, came from commercial contracting background as far as we usually subbed under EC. So worked a lot with like school systems, pro audio video, a lot of new development stuff with hospitals and so forth. So knew a lot of the contracting world, a lot of the business world type of thing as well before I even kind of jumped over into the insurance side of things.
And how long has that been going? How long has Nova existed?
2019. So I finally jumped over to open my own. And like I said, I don't know if I would build a scratch agency again all over from, day one being I'm the solo client and I've got to figure out how to get more clients. But it's been a wild whirlwind of a ride with now, multiple staff, multiple agents, and hopefully the next 5 years goal is to start doing a lot more M&A side of things and acquiring more agencies and really scaling it type of scenario, leveraging people, leveraging technology in a way that I think we can compete, and we have some carrier lists that definitely allow us to compete against anybody in town, which is kind of cool. So even though, we might be a little bit smaller, we've got some carrier options that give us a seat at the table, even against the big dogs in town. So that's been cool.
So what has the progression? So you go in, insurance is one, ambiguous. I don't understand it.
Is a foreign language. That is for sure.
I generally understand what the premise is behind insurance, but I'm glad that I have you and my wife to explain it today. And then two, I feel like that people niche pretty heavily in insurance. So what would you say that Nova does?
I would say the niches are right now, and that could always change, but really we've kind of, it kind of developed out of just what we're really good at and competitive at type of scenario. And from a smart decision, I was like, where are we competitive? Where are we going to be able to have more seats at the table and be more successful at? And that's kind of the options we went down with, which are franchises. Usually that involves commercial property. So commercial property first and foremost, but usually there's franchises that are involved that we can, and then usually professions that have 20 plus employees in that sense. So really focusing on the work comp side of things as well. The commercial property side of things, whether that's commercial buildings, whether that's you're investing in multifamily, investing in single family houses. That kind of came about just from a lot of friends that I had in the industry as far as investing, and that I don't know, the way I'm wired with artistic aspects that was always attractive to me as far as something I knew I wanted to get into as well, just on a separate personal level. And so, started the podcast, Keys to the Commonwealth a couple of years back, which was kind of ironic how we obviously became friends, having multiple kind of real estate podcasts in that sense. And the podcast is not just real estate only anymore. But it originally started that way where I was like, I'm just going to kind of build a bigger pockets for Kentucky, so to speak. I don't know the first thing about real estate investing. I actually deal with it on the commercial side or the insurance and commercial insurance side all the time, have lots of clients with that type of business. But I was like, I got to get it. I want to get into it myself type of scenario, both from a long-term wealth plan as well as just a tax strategy option as well, which, a lot of people do. So, however, like I said, I didn't know the first thing about it. I didn't at all. And I was like, I thought you just had to have tons of money to kind of get into it or whatnot. And so I was like, I'm just going to start the podcast. I've already got lots of clients that could tell their stories and so forth. And so I started the podcast and just started having people on from day one. So it was kind of like for someone who's never been investing in real estate at all. In theory, you could start with season 1 there and just kind of like I was learning as anybody listening to it would be learning at the same time. Like the question, we would come up to a next stage of like investing, and it would be like, okay, well, like if I remember we got our first tenants, and I was like, well, crap, what happens if I have to evict a tenant? A type of scenario. It's like, and so then I'd ask, hey, who should we talk to about this? And they were like, I was like, grab Marshall, over there, and then. So like, hey, come on the podcast. And so I'm just asking the questions in real time. I just happen to be recording at the same time. And that was kind of the stage there for the first couple of years. But that's been a wild journey too that I didn't foresee. And when I say wild, that's kind of the nature of my life. It's always been like, I'm just going to take gambles here on calculated gambles, not like being overly ridiculously ambitious from a standpoint that could really be dangerous. But yeah, we've grown that and end up falling into multifamily side of investing as far as that, and small apartments and so forth. And that's been awesome as well.
Yeah, talk about it. So that's cool because that's almost like, what's the podcast called? Like it's a startup podcast. I can't think what it's called, but it kind of follows you along with the startup entrepreneurs journey, and it's kind of what you have done. Yeah. In theory is like, I'm going to ask people and I'm going to let other people ask or hear what I'm asking them. But realistically, I just want to know how to evict a tenant, and I want other people to know that too.
And I think the biggest surprise for me in general, from an entrepreneur standpoint in my journey with both obviously the insurance side and the real estate side, is how, and maybe that's more of a Lexington thing in general, but I think it's a human nature thing, but how many more people were willing, if you just ask, to give their advice or help out and hey, here's my experience or here's what not to do. And that just asking the questions, I don't know. And there's been so many points in my life where I had to basically either face my fear, and that's a whole nother topic of conversation for sure, or just ask the question and look like an idiot. But I'm like, I don't know the answer. I need to know the answer, or would like to know the answer and how to do this. So I just got to ask. And people are, you get over that fear of looking like an idiot, and people are realizing like, oh, let me help you out with this. And I'm trying to return the favor, where I can now as well, type of thing. But
that also makes me think, I heard a joke the other day. I think it was a tweet. When I say heard a joke, most of the time it's a tweet or a response to a tweet.
Do we still call them tweets? I don't.
Oh shoot, X's.
I mean, tweet was put into the dictionary, so I feel like we still call it a tweet. But
all right, I saw an X the other day.
I don't know.
And it was about how Mark Stoops, every time that he doesn't get a call his way, he makes the ref explain it to him, and he has this face that looks like he's never heard of the word football before. Every time they explain a call to him, he's dead serious. He's like, I want to know why that's holding. I don't know what holding is.
So that explains that face I've seen quite a bit over the last several years.
Yeah, it's either mad or questioning.
So now I know there's more of he's not really.
It's a strategy.
It's a strategy.
It's
okay.
a strategy.
That's good.
So you mentioned multifamily. So you quite literally have been going along that journey. So you've now started buying multifamily over the last few years.
Yeah. So that's again, jumping into things. We went from 0 to 6 units or 6 doors, within the first three days apart. So my first jump into real estate was owning 3 duplexes, of which, of course, we acquired 2, and then 3 days later acquired 1. That story is wild because it was 2 duplexes that we initially did our cash kind of investment into. There was a third one next door that was identical, and I was like, "Hey, it'd be really cool." I have a business partner on that side of things who's awesome. He has a real estate management company, but we saw the third duplex pop up on one of those local Facebook groups, and while we're in the middle of the closing process of these first 2, our first step into real estate owning. We've convinced our wives that like, hey, this is going to be a good thing. And they're like, okay, we're going to put our money where, and it pops up and I call him and I'm like, hey, this third duplex is live. It's on the Facebook group right now. He's like, well, shut up. Call the guy right now. I call the guy and tell him who I am. He was kind of excited to know who was buying the 2 next door and that we were that person. And so he's like, I'll give you all first right. Just meet me there tomorrow. And so I meet him there to show up. Again, I've not ever really purchased. We used a realtor for the first 2, which is great, on an on-market deal. And so this is clearly an off-market deal. We walked through it. This duplex hadn't been lived in multiple years because it had been tied up in probate for a long time, and it needed a heck of a lot of work. But I was like, it's right next to the other 2. It's the identical one. It'd be awesome to just kind of have all 3 duplexes there on that street. So we kind of agreed to a price. It's a little bit more than I truly wanted based upon the fact that I knew all the work that I needed to do. A little bit naive on maybe how much it cost, but still was like, I call my buddy, who's a bit of an investor and realtor himself. I was like, hey, what, you think I should do it? He was like, I don't know. But the thing was, I didn't know how I was going to pay for it. And that's probably a big part of my story here as far as like investing in real estate and having no idea how I'm paying for it. Okay. That'll be a trend theme that you'll find here. But he's like, well, it doesn't matter. Just get it on a 60-day close and you'll figure it out. I'm like, okay. And so I call my buddy who's a realtor, that's an investor that has, I'm sure, a contract. So I'm like, hey, Scott, you got a contract I can borrow and edit? He's like, yeah. So he sends it to me. We've agreed on a handshake deal. I send it to the guy in an email. He signs off on it. I'm like, sweet. Now we have a contract for the third duplex. I'm not going to tell the bank that we're currently under underwriting and all that stuff for the first 2 to close, that I'm even now under contract on the one next door. Don't want to jeopardize that one, but I have no way of paying for this. So then we kind of figure out the whole hard money side of things, end up closing on like that. Like I said, on a Monday after we closed on the first 2 on Friday, we get in there and me and my business partner, we kind of updated a lot of it ourselves, really got the nitty gritty as far as how much time takes for things, as well as how much things cost in that sense. True bird it's, so kind of like cashed out, refied after, and didn't end up, actually came out with a small check out the other end. So acquired the third duplex without any money, and then got a single family across the street the same way from the same guy. And so we went from 0 to 7 units basically, I think within like 6 months or something like that. And then from there, it's kind of been, we're going to always do our door, looking for opportunities and so forth. But this was 2.5 years ago. Yeah, 2.5 years ago. And since then, last year, we acquired a 12-unit apartment on seller financing options. So with no real money of ours into it. I'll play the long game all day long, every day, which a lot of real estate people do, I get. And then I'll go ahead and mention it, I guess, because I don't think we're going to, in jeopardy of missing out, but then we're going to be doing 26 units seller financing closing here in a week as well. So we will have gone, and all those times are like, I don't have money, but the story is I've found people with money that want to partner. If it's a good deal in real estate, it's a good deal. So it's not a matter of, that's the biggest hurdle is it a good deal? And if it's a good deal, somebody's going to see that too with you, even if you don't have money to kind of partner with.
The money side of things is what didn't make sense to me at first. Steve Pulliam, who's been instrumental in my office. He's the one who started SVN in Lexington. He told me that from day one, and I was like, I don't really believe that. Like, what do you mean? Like, this is $1 million, whatever. And you're telling me that the money's not an issue, but it's really not. It's never the issue, because there's always, if it's a good enough deal, there's always capital to fund it. But that's interesting that you learned that literally by like taking a chance.
Just
right?
figuring it out. Yeah. Like, I mean, and that's a big part of my life that I've realized and kind of come to terms with from mulling it over and chewing on it lately in the last year is just from a fear standpoint. And that, you know, you take a line and the line's fear, and then usually opportunity is usually just on the other side of that line, you know, and so many people, we get so fearful of facing that fear and crossing that line of fear type of scenario of what the opportunity, but opportunity is usually so close to us. It's just on the other side of fear. And then a big part of me too is whether it's true or not. I mean, I think it sounds true, but I heard from, I think, a pastor one time recently that, you know, we were only born with two fears, the fear of falling and the fear of loud noises. And that really, if I can just get back to kind of the way we were born or created type of scenario, like, and that's what I've been kind of trying to do more and more with my life, and had the opportunity to speak and usually that fear has not been I think a huge deal as of late. You know, once you start really taking chances and getting over fear and not letting that keep you from doing things, it gets easier. But then I had to speak at an insurance conference last week, which was a huge honor at an insurance tech conference. And it was the first time I'm kind of like sitting here feeling fear again, because I've been on stage many times, but never from an insurance perspective type of scenario, and kind of started getting those self-doubts and so forth. But I'm sitting here wearing kind of like our agency motto, which is Born Fearless, like logos on my hat and other stuff like that. I'm like, you know what? No, I'm going to choose to get back to how I was born in that sense, and not be fearful in this matter.
Man, that's awesome. Dripping sweat, just covered in Born Fearless merch. That's awesome. And what was the conference? I'm just curious.
Yeah, it's called Indie Tech. It's like a newer conference, but it's all about the technology side of the independent insurance agencies. And so there's a lot of that stuff coming out right now, which is why we're trying to leverage a lot of it.
Craftsmen Contractors is Central Kentucky's one-stop shop for roofing, windows, siding, and gutters. CraftsmenContractors.com/contact us will get you straight to the form you need so that their team will get in touch about your project. Or just text Steven at 859-246-0108. When they finish your project of windows, siding, gutters, or roofing, you'll see what they mean when they say we build with integrity.
I'm sitting here thinking about is interesting contrast. I think there's a way to combine those two things, but you talked about from the insurance side of things earlier, you love like the tech and the new world behind insurance. Real estate, there is that, but there's also the part of real estate that's just, as you mentioned, like you had to buy the deal, you had to take the risk, and then you just had to like literally learn how to do like the nitty gritty of like replacing floors and like unclogging toilets. And have you seen like those worlds combine for your real estate investing, or have you mostly done like in terms of like you sourcing deals or like you putting together capital? Like, has it just been like relationships and calls and those things, or like, are you using something that?
I mean, you probably could answer this more than I could, but it doesn't seem like technology from the way we transact and do real estate maybe has changed how we do real estate a lot. Maybe finding deals, maybe in that sense, obviously. Thankfully, owning an insurance agency that also does a lot of property and commercial property insurance, I just know a lot of these people. And so it's kind of a nice way of like being able to find out if somebody's wanting to potentially sell their property or other stuff like that. So some of these deals have basically come out of the fact that they were clients first that wanted to kind of get out of it. But that may not huge crossover in that sense.
The other thing about that is I think it probably makes you a lot better at your job. Like your primary job of insurance, I bet owning real estate makes you a lot better at your job. Is that fair? I know,
I'm in it. And that's why that kind of necessitated one of the things that one of our niches in that sense, as far as commercial property. And that has become such a, how do I say this? It's become much, much more difficult to insure property in the last year, as we kind of talked about a little bit. And I'm sure this is the hardest insurance market of my 40-year lifetime in that sense. Like rates have absolutely everybody is understanding their NOI, that insurance part is taking a bigger part of that pie than it ever has as far as the percentage. I assume you would agree with that.
Agreed.
Yeah.
Yes.
And
it's just a barrier to entry in some, could be like, there's a lot more no's. Again, I've only been doing this 6 or 7 years. There's a lot more no's now
from the insurance side.
Correct.
Yes.
Than ever before.
Yes. And so especially from a commercial property set portion of that, so anything truly related to commercial property, and I think people can really see that. And if I could just talk to that point in some ways, and what's causing this to be honestly the worst year of my 40-year lifetime. It's not maybe worst ever, but just worst pretty much of our last 30, 40 years. And we're seeing signs of it getting better. So I can't say there's some positive aspects of it, but there's definitely an evolution of how it's changing the insurance market here, especially in Kentucky. So speaking to Kentucky specifically, and this is a lot more of, the Tennessee, Ohio areas, there really is a lot of data showing and pointing to the fact that the effects of Tornado Alley seemingly have kind of moved permanently eastward. And so to put that in perspective, from a large, what we call CAT claims, so catastrophic claims, meaning, some weather event comes through and impacts, hundreds of people or thousands of people, right? There's a lot of people impacted all at one time. That's what we call a CAT claim. Like those CAT claims that have been in Kentucky up, anywhere from 2.7 to 3x the normal 10-year historical averages that they typically are trying to fluctuate rates to accommodate for. But unfortunately, that 2.7 to 3x click as far as how much more often they were happening, which I think we can all here, especially in Lexington, Versailles, can kind of have been feeling and seeing. There's been a lot more just heavier storms coming through, and we've had so many more trees down than we've ever really had here on a consistent basis. But that's been happening for the last 2 straight years. Simultaneously, you had inflation now costing the cost to fix all of said claims now costing 30, 40, 50% more at a rapid increase in inflation. And then so those are the first 2 ways that has been impacted. The third way is the reinsurance market. And without getting super nerdy on that, basically that's
get nerdy.
The reinsurance market is basically every carrier has to have their own insurance themselves. They're required to have insurance. So if they, from a legal standpoint with the Department of Insurances, that way it's their security, almost like FDIC backing of your bank money type of thing, where there's an insurance policy. If they were to go defunct, belly up, bankrupt, whatnot, there's still going to be a policy to help pay out from the consumer standpoint for claims, right? And a lot of times, large policy type of stuff, they might even go add more reinsurance to help case, like if they had, big blue tower came down, like they're not going to bear the brunt of that entire thing. They have part of an insurance policy themselves that helps out with that. Well, when you had this much massive loss from a property standpoint, the reinsurance policies and markets were hit as well from carriers having to utilize that way more than they used to be. So that cost skyrocketed, which is passed on to the carrier. The carriers now had to pay, up to 50% more for all the losses that have happened, and the losses have happened at almost 3x the normal averages at a consistent back-to-back years. You take the flooding in Eastern Kentucky, tornadoes in Western Kentucky, the straight line winds, the hailstorms, etc. I mean, it's been a lot. So, and that's more of a national thing, but I'm pointing to everything happening here more locally, obviously. So in a big way, the insurance industry was on a bit of a, not on necessarily the edge of a knife, but there was just drastic changes that were going to have to happen in order to kind of right the ship and get things under control in that sense. And so we kind of knew 2024, and I'm sure everybody has either experienced that or will be here soon with your NOIs and the renewals you're going to get or have been getting. But I say at a minimum, we've been seeing anywhere from 20 to 40% increases on property this year alone, as a way to kind of help get back to righting that ship. Anybody that would want to know in that sense, I would expect next year, we do expect increases next year as well. Not as bad as this year, as we hopefully get back down the backside of a bell curve, hopefully trending towards 2026, being more of a closer return to the ebbs and flows of insurance as far as rates go. Probably 2027, but 2026, 2027, just as a heads up.
In terms of not having these large upward swings.
And that's assuming inflation gets under control, which I think we're seeing signs of that for sure. But that's definitely assuming weather calms down. And obviously we don't know about that. So we'll see. And they're starting to have to plan accordingly now and change those 10-year historical averages models that they've had for decades type of scenario. So
many ignorant follow-up questions, but I just want to
it's a foreign language. So if you have it, most people have it by all means, for sure.
All right. First ignorant follow-up question. So some of these things we were maybe coasting. Is that fair to say? Sure. Like had the industry just not caught up to what was already happening? Like were we, in a sense, were those companies underinsured?
No, it was where it was supposed to be. And there was definitely years I even saw rates go down for people who paid less on their renewal than they did the prior year for property insurance. Okay. But it was just a perfect storm of inflation. You know, if we had inflation, that would be one part of it for sure. Yeah. But we had inflation and record cat claim things that were just did not fit the models of what they would look at from a 10-year averages and 20-year averages. And it was on a consistent back-to-back to, you know, I mean, we're like 2.5 years it's been happening type of scenario. So it was a perfect storm, unfortunately.
And then my second follow-up question.
Pun intended.
I was going to say, I was trying not, I can be like a squirrel when somebody says something funny. I have to comment on it. I tried not to, but thank you for doing it for me. My second follow-up question is, so just from somebody that owns commercial real estate or even my house. So the typical way that would work, I get quoted for insurance before I close on a property. Mm-hmm. That insurance is in place for 1 year. Mm-hmm. From date of close, essentially date of insured to the next year. When, like, how will somebody know ahead of time that their insurance is about to go up 20 to 40%?
And if they're,
or will they?
Yeah. I mean, you should know usually within 60 to 90 days of what that renewal is going to be, or if you're going to get dropped type of scenario. Typically that renewal should be coming in, you know, especially in commercial world in advance. If you've got like a single family stuff with like State Farm or something like that, it might just be 30 days or whatnot. But yeah, usually should know several months in advance, but we've been trying to warn a lot of people and a lot of clients to be more proactive. And, you know, we got a lot of real estate where, you know, they've got, say one example of 50, 60 homes of a real estate investor. And I've been telling them, like, just know the renewal is coming. It's probably going to be going up January 1, 30%, something like that. And we're trying to work out some things to kind of get that down and be creative as far as helping make that a little less or a little more manageable in that sense, and doing some things that we can do on that side. So, but yeah.
So then plugging Nova a little bit, but how, trying to understand where your role is in this. So my insurance is going way up. I've been told I'm going to be dropped 2 to 3 months, or that my insurance is going to go way up. I then contact Landry to shop different rates for me, or what? How does that actually work? Like, how is your role in the insurance industry work?
Yeah. So as an advisor, and I say advisor because we truly are what I would consider risk advisors. So again, I'm not captive in any one company, and people usually dealing with commercial real estate understand that they're not going to usually go to a State Farm, or nothing wrong with State Farm or Farm Bureau, but they don't truly play in a commercial real estate insurance world type of thing. So playing in a true commercial insurance world, you know, and dealing with agencies that have, you know, certified insurance counselor like CIC designations, and really dive into, because I'll put it this way, there's a lot of insurance agencies in a town that are great, but they truly just came from a home and auto background that really might dabble in commercial insurance, which is fine, but like truly don't know, you know, work comp stuff, large commercial property type of ideas. And that's what we've kind of focused on in a big way. So from my perspective as an insurance advisor, finding the best option. So usually you can still find options, or be like, hey, where you're at still good, if that's the case, because I'm always still going to make it as easy on the client as possible, right? Like, just because it's not a good fit right now doesn't mean it might not be down the road. Or if it's like, hey, we're no longer a good fit, and that the opportunity you've got is a better fit, by all means, I'm going to make it as easy for you to walk out the door, so that hopefully one day it's just as easy for you to walk back in the door. I find a lot of agents get a little bit pissy and butthurt over people, you know, losing a client, et cetera. And I'm like, you know, it's just business. I'm going to be, you know, it's nothing personal. We're going to be as personal as possible for the client, but we're not going to take anything personal in that sense, because what's better for you, it's not all about me. It's all about the end result for the client. But being able to also find people that know this stuff and can be creative as well is helpful in this time to kind of negate sometimes these prices or increases. For one example, there was a shopping strip I just insured in Owensboro, and it was for perspective, it was a replacement cost was $5 million on it, meaning that doesn't necessarily mean it costs $5 million to buy it, but what would it cost to replace it if we had to rebuild it? As you know, it's always going to cost more to rebuild something than to just build something identical next door than it will be to just to buy the one.
Which when the market was like really, really, really hot, that was like pricing got so silly on trying to sell assets that became the whole argument. It's like, well, you can't build it for this.
Right.
In the insurance world, that works. In the commercial real estate world, it's like, well, I'm not trying to build it for this. Like, it's existing, so that doesn't mean I should have to pay it for the price of it being new.
Right.
But anyway, go on.
But you can get into things between, so that for that example, we really weren't able to, we're not able to save the individual that much money. But what we were able to do, as far as when push comes to shove, it's going to be about when a claim happens, and that's where we were able to really help out. Meaning, the shopping strip complex was it was, like I said, $5 million replacement $5 million replacement cost. The roof estimate, if it had to be replaced, was going to be $800,000 to $900,000 out of that cost. So these are the factors they're looking at. And I had a carrier that a lot of times on the large commercial stuff like that, they're going to do a percentage deductible on your wind hail. Wind hail is usually going to be basically defined as your roof or the siding, basically tornadoes, hailstorms. And those are the things that are usually going to happen more often than not than, say, maybe a fire, obviously. But a lot of times on the large stuff, they're going to go to a percentage deductible, 1%, 2%. So the guy had, 1% deductible on that policy, which means his deductible, if a windstorm and so forth came through on his roof, was going to be now $50,000 to $60,000 deductible, which obviously is, not, and he's a smaller investor with this, he didn't have like a large portfolio type of stuff that would definitely affect him more, but was able to kind of come in and get a carrier to do a flat rate deductible of, $25,000, which, again, he saved him a tiny bit of money, but if he actually had something happen, was going to save him $25,000 when push came to shove. And so holistically looking at all those concepts as a risk advisor to kind of figure out, not just, bottom line prices, some parts of it, but it's obviously not everything in that sense. And what really matters when it comes down to when crap hits the fan. Yep. And we're hopefully there on your worst day to kind of help put it back together.
DevelopLex is also sponsored by Community Trust Bank. Hi there, this is Cam Dacey, Commercial Loan Officer at Community Trust Bank and avid DevelopLex and Middle Tech podcast listener. Community Trust offers a wide variety of home loans, commercial loans, and small business loans to suit your financial needs, as well as mobile banking, internet banking, and bill pay. Their friendly and professional staff would love to assist you at one of their 6 Lexington locations. Community Trust Bank is committed to building communities built on trust. Member FDIC, equal housing lender, subject to credit approval.
Another ignorant question coming your way. Living in Kentucky. So another thing that I know about insurance is that people have issues with, say, I feel like I'm fully insured for my, let's just call it a property. I'm fully insured for my warehouse. And then something happens where a flood happened and I'm like, great, I have insurance. And then turns out I don't have insurance. Yeah. That's where an advisor also steps in is to advise you on like, these are probably the things that in the fine print you need to make sure are within, because you own this type of asset in this type of market. This isn't your standard policy, but we need to add some more things in there. Is that also part of the role?
Oh yeah.
It's so ambiguous. It's all ambiguous to a person like me. And so I always feel like I kind of joked about my health insurance earlier. I kind of always feel like I don't have health insurance or car insurance or auto, home insurance. Like I'm always like, I pay this thing out of my escrow, or I pay this thing for one of the properties we own, but I don't actually know if push came to shove, I'm insured.
Sure. And with what the P&C side, which is what I am, so the property and casualty side, I will not touch health insurance. Obviously, that's a whole different ballgame. But the thing is, you can't insure for everything. You really can't. There's always going to be something, but it's found, like you said, figuring out where your biggest pain points of where you could be hit. And a lot of that times that could just be a liability scenario of like simply adding an umbrella policy for $500-$600. That's not going to change price to help make sure if something happened and you were underinsured in a certain area, that you have liability coverage on top of that. It could be, a simple scenarios is making sure like, hey, I've got this commercial building, but it's got a basement area. And if it floods from a sewer backup, like that coverage is not going to be there. And so like, looking at it, oh, it's got a basement. We need to add this coverage because if that basement floods from a sewer backup, you have no coverage for your policy unless we put this on there. So there are definitely things we can do to kind of add different stuff between, an earthquake or, but flood, obviously that's been in the news as of late and stuff like that. And most people don't have flood insurance at all. And most people don't think about that. They're like, oh, I'm going to be fine and so forth. It's never flooded here, but you should probably always check. I would say an easy way to do it, because I get so many people that kind of call us to ask us, like, is this in a floodplain or et cetera, is you can simply, easy 30-second hack, you can simply go to FEMA's website, type in the address of where it is, and maybe you all know this already, but you can just look up to see if it's in a floodplain or not, and it'll tell you right there. You can zoom in on your address, and you'll be able to see if it's in like this shaded blue areas or not, and if it's like more of a 1,000-year risk or more of like 100-year risk type of a scenario. For sure.
Plug for the DevelopLex newsletter that Ross works so hard on these days. We did put the FEMA map, but it was funny. We had several, we have the map of the week or whatever.
Okay.
And we did have a ton of people respond when we put out the FEMA map of like, didn't realize this resource existed. Super ambiguous. Nobody really knows.
But super easy.
Yeah, super easy, but it's so like the whole thing is so ambiguous. Insurance is one of the most ambiguous parts of my job, 100%.
And has it become a bigger sticking point for deals?
Yes.
As of late too, I would imagine.
Yeah, I think it depends on what, obviously. For me, I kind of am very niche as well. And I feel like we actually work a lot more over the last year on like land development and, we do a lot of retail stuff. So like freestanding, single tenant, triple net type of stuff. So that's not really super complicated.
Right.
And a lot of it's new development. But in terms of, so I know like our multifamily team within our office, that became a huge sticking point on a deal that they were just working on, was essentially under, there's a lot. Yep. But yes, insurance at the end of the day was the reason for, call it $150,000 retrade on a several $1 million property at the last minute.
Yeah. And the lesser's only risk, or that's what we call lesser's only risk, but buying buildings to, in essence, have a tenant to rent it out. You're not occupying it from a commercial standpoint, or the habitational. We call it habitational on insurance side, but that's in theory your apartments, your multifamilies, and so forth like that has become probably one of the hardest pain points right now from the insurance perspective, as far as so many carriers right now are definitely just outright declining it or saying we're not doing above this. So really, you would think that obviously apartments and habitational multifamily type stuff is so common everywhere, but it's actually becoming very hard. It's becoming harder and harder to insure as far as the carriers out there that right now that will even accept it. And so you could have all these carriers, but 80% of them are like, nope, we don't do that right now. Or we do, but only under these certain stipulations. If I could point out to one thing that is definitely a changing trend from a multifamily side of things to be on the lookout for and probably start considering as an investor, because we're doing this ourselves, is what's called second means of egress. So what I mean by that is, for example, we've got these 26 units we're buying. In that sense, they've got a simple one tenant on the first floor, or a bunch of tenants on the first floor, but then there's a second door next to each one of those that goes to an upstairs part where they have an upstairs location as well. However, that is the only stairwell up and down from that second story. Usually bigger apartments, you obviously, there's a front stairwell and usually there's a back stairwell. So you have two means of getting down if one's blocked or on fire or something like that, right? So the same concept with a lot of these built in this, 60s, 70s, 80s, there's only usually necessarily one stairwell up to that second floor or down. That is causing a lot more problems as insurance has started to tighten up or hardening in that sense. So part of the ways we're trying to accommodate this, especially from a future and making it more attractive to insurance, is by adding a second egress. A lot of these apartment type places might have a deck on the back, but it's usually you can't get up or down off of that deck. It's usually just there if you need to go out, smoke or something like that outside. Yeah. But for example, there's a cost to it for sure, but we're going in and putting stairwells down from these decks. So now you're accommodating a second way of getting out of that apartment that's on the second floor or something like that.
Interesting.
And usually it's really, like I said, that's only going into more of like quadplexes, eightplexes where, you know, like there's
It's not
just,
like a
it's not like a
400
full,
unit
yeah,
apartment.
exactly. And
Got a
so
stairwell
forth.
coming from the 8th
Unfortunately,
floor.
the 26 we are buying are all in that like 8plex, 6plex, 12plex kind of side of things. They're not stacked. Once you basically get above 2 stories, it's automatically usually baked in
Be a
like
lot of
that.
stairs.
But so but there's a lot of multifamily out there that's, you know, that's the way they were built, you know, 70s and 80s. And that has become a huge sticking point from carriers where, yes, we'll write it to that point of like, yes, we'll write it, but only if it has 2 means of egress type of scenario. And if no 2 means of egress, automatic no. And so the options that are available for us to find a carrier that will fit that become more expensive because of that, and less to choose from that perspective as well. So we're trying to personally, like I said, we're making proactive changes in that case. And I'm trying to tell as many people as possible just to kind of be aware that that's kind of a changing trend to be aware of, that it's going to become harder and harder of a sticking point for you, more than likely, if you don't kind of start being proactive on that.
And I think that speaks to you being a real estate investor and actually understanding that too. It's kind of cool. Just a little hat off to you there. As we end things, we're running up on time here. A couple questions. One, I like to say the use of the word, like, you know, talking about like the hot dog industry, big hot dog, or weather, big weather for big insurance. If Landry Fields was the head of big insurance, if you could rule the day and you would be in charge of insurance, how would insurance change from what it is currently? I didn't prepare you on that question. That's
no, you're good. How would I change insurance? I mean, and my goal is to start doing a lot more M&As to kind of become more big insurance. What we try to help pride ourselves on is like, there's so much in insurance that when you have to go out and do something, it's like, I got to call my agent and I have to sit there and wait on something forever. And yes, from a transactional standpoint, sometimes reshopping something there is, but there's just ways that people can be doing it quicker and better and faster, which is why I was speaking at that insurance conference. But also from a communication standpoint of like, I'm not going to remember every email to send, but leveraging the technology out there to try to hopefully over communicate. I'd rather over communicate than under communicate if I can for those clients. So trying to leverage the technologies out there to bring a better service, because I think this, you know, the carriers are what the carriers are. You know, I can't really change that at the end of the day as far as what they will take, what they will accept, et cetera. But the experience side and leveraging technology and how quickly and efficiently things can be done is something that I could automatically change. And like I said, I expect to build an agency 3x in size, capable with the same type of level employees as you were able to do just 5 years ago is my goal in that sense. So yeah.
Love that. Parting thoughts on the insurance industry or Lexington in general, what you're seeing, what you want people to be aware of, how can people reach you, et cetera.
I'll hit both. With Lexington, what I'm excited for is the obviously the development of downtown and the park and everything like that. And it's just like, it's so cool to see how far it's come. And how I've got friends coming in next week that have never been to the state of Kentucky from Nebraska. And I'm like, hey, you got to come during October or April. I prefer October because, as you know, like, I don't think it gets any better than Lexington than October with the fall weather, the changing bonfires, Keeneland, football, basketball starting, just the food too. I feel like the food here has just like gotten so much better over the last 10 years as well. Between like, I used to be able to like know like what restaurants you had to try, and now I'm like, I've never heard of that restaurant. Like, I can't 100%. Keep up with it that as well. Yeah. So that's pretty awesome, especially when the park opens, and being a musician when the amphitheater opens, and we have kind of that middle ground tier of like musicians. So I don't know, maybe 21 Pilots probably still be in Rupp Arena if they came at that point. But that being said, I think in the insurance side, just a real quick fact that most people don't realize, and that quantity of claims is ultimately the biggest red flag of all the carriers, and most people don't realize that. So it behooves you to kind of self-insure yourself a little bit more to be able to kind of maybe bite off that $5,000, $10,000, $15,000 claim rather than actually putting it through, depending on how big of size of obviously, you know, your commercial property is. And that filing a claim, even if it's rejected, still counts as a claim. So most people don't realize that. They'll just jump to like filing a claim to see if it sticks. And that is not at all what you want to do. And it's not behooving you and your future rates as well, or people accepting you, because quantity of claims, like is the biggest red flag of all. And a carrier will be much more likely to take a client with one, $75,000 claim than they will be for one that has 3 claims, 2 of which were denied and one which was maybe like 12,000. That one's going to be less attractive to a carrier type of thing. So always calling the agent to kind of talk through things before just jumping to that, and maybe trying to realize maybe we should start self-insuring ourselves a little bit more than we're used to, where we would just rely on, if anything happens, I'll just run it through insurance. So that's kind of my caveat on that. If people do want to find me, obviously we got Keys to the Commonwealth podcast. You can find me on Instagram at Landry Fields, LANDRY Fields _. I got a lot of clips on there and stuff from our podcast and what I'm doing each and every day. And you can always reach me at our novainsuranceGroup.com as well. So happy to have conversations, love grabbing coffees and so forth with people. And honestly, I just love networking, because as you and I know, this is the biggest small town in America. And if I don't know them, somebody I do know does know the person. So you can usually, there's usually what's the 2 degrees from Kevin Bacon type of scenario. Like there's something like that with here in Lexington that it all has to be connected.
It's like half a degree.
Yeah. It's got to be.
Yeah. Awesome. Thanks for joining.
Absolutely. Appreciate it.